Hey guys, and welcome back to another video, and today I'm going to be giving you a quick update on Rocket Companies. Now, Rocket Companies is actually a stock that I covered all the way back when they IPO'd, and it is still the largest holding that I have in my portfolio. Although it hasn't been doing what we've been wanting it to for these last couple of months, I think this could be the time for it to turn around. In this video, I'll be explaining exactly why you saw this huge jump in the stock price on Friday and why, once again, I think this trend is going to continue, and I think this could be the time that Rocket Companies finally makes its big run again. The reason that this stock made its big jump on Friday is pretty simple. Rocket Companies released their earnings Friday after market, and they were fantastic. They blew out their expected earnings in almost all categories, reporting earnings of around $1.10 a share compared to 87 cents a share estimated. Their revenue was also around $4.8 billion compared to around $2 billion in 2019 quarter 4. When you want to talk about revenue for the entire year, we're talking about around $16 billion versus $5.1 billion in 2019. And in terms of net income, this is the biggest difference of them all. We're talking about $9.5 billion this year compared to $0.9 billion last year. This is triple-digit growth in almost all categories, and it clearly shows you that this company is ready to take off, even if its stock is lagging a little bit behind. Other analysts that are probably a little bit more qualified than I am also had great things to say about the stock. You can see that Jefferies upped their price target on the stock to $30 from $27.50 and said that the special dividend, which we'll get into in just a minute, as well as powerful fundamentals, made this price target upgrade possible. Bloomberg said they loved their sale margin and that their fourth quarter was phenomenal. And Morgan Stanley analyst was significantly impressed with their profitability and the fact that they're in such a great market right now. The mortgage market is truly booming as the housing market also continues to boom. Now, this massive revenue growth is not expected to stop in 2021. They're estimating closed loan volume of $98 billion, which would be a 90 to 99% increase compared to just $51 billion in the first quarter of 2020. This continues with things like a gain on sales margins of 3.6 to 3.9% compared to just 3.25% in 2020. While some people might say that Rocket just benefited from a perfect year for a thing like a mortgage company in 2020, Rocket is coming out and saying that they think 2021 is going to be even better. Now, though, the most important thing, in my opinion, that came out of their earnings was this statement right here by Julie Booth, which is their chief financial officer. She said, "Given our record level of profitability in 2020, the board approved a special dividend of $1.11 for every Class A common share, funded by a distribution of $2.2 billion. She says, "Our substantial cash generation provides a significant opportunity to drive long-term value for our shareholders." So not only might this be a one-time dividend, but she could be hinting in that Rocket plans to provide a consistent dividend for their shareholders. If this is true, this would bring in millions of other investors who only invest in companies who provide dividends for their stockholders, and this would provide a whole new level of demand for this stock, and that would cause a huge run. Now, this would be only if they consistently provided this dividend, but what exactly does this one-time dividend do, and why may this be even more significant than a long-term dividend? Now, first, it's important to know the situation that Rocket Companies has been put in on the stock market. For one reason or another, it has had a massive short attack on the stock over and over and over, driving the price down to hover right around the $20 range. You can see that they have around a 40% short interest exposure, and I'll explain that in just a second. If you go to a website like MarketBeat, it makes it much easier to understand what that 40% short interest is. So you can see that the short percent of float, according to MarketBeat, once again sits right around 40%, and the total float of shares is right around 108 million. So you can see that there's currently 43 million shares that are shorted. And if you don't understand what shorting a share is, basically you're borrowing that share and betting that it will go down over time. So it's a very bearish thing for any stock to have around 40% of its shares shorted. That is way above the market average when it comes to percent shorted shares. So why exactly is this significant, and why would that one time around 5% dividend be so detrimental to the massive amount, the 43 million shares that are shorted? Well, you see, when a company pays a dividend, if you're short on the stock, you're actually responsible for paying the dividend owed to the lender. So all of these people who have these rocket shorted shares would be responsible for paying 5% roughly of the stock price back to the person that they lended the shares from. This is something that I suspect a lot of people will not want to do, and so I think we might see a massive short squeeze as the dividend pay date starts to come up, with these short sellers not wanting to pay that fairly large dividend. In terms of price targets for this stock, analysts currently have a median of around $24, which would be just a moderate 10% increase, with a high of 50% and a low of negative 15%. Although a lot of these forecasts have not been updated since these earnings, and like we saw with that one organization, they've already upped their price target by a decent amount of around $2.50, and so I expect that we'll see other analysts doing this very soon. I hope you did go on to enjoy today's video, and if you did, make sure you leave a like down below to show your appreciation, and hit that subscribe button while you're down there so you don't miss out on any more videos like this one. But other than that, I'll see you in the next one.